Hey everybody, great to be back with you here. Mike Fairborn for our ThinkScript class on Thursdays. Always great to have you on board and to go through these discussions with you. Today, folks, I wanted to look at not just the exponential moving average, but a zero lag exponential moving average. Actually something that traders might be utilizing, although we don't have code, had to build some code for it to put it on Thinkorswim specifically within ThinkScript. So we were able to do that today. It's not too crazy of a code, but I want to explain what's going on with it. The same concept, too, can be used for other indicators as well, but we'll certainly want to use it on an exponential moving average to get those maybe a little bit quicker signals, maybe 2 to 3 days quicker in some cases. So we'll look at that. We'll look at a crossover as well as a scan using the same approach. So would like to welcome you all on board, as I mentioned. Hey, great to have JB on board with us. You can see that is James Boyd, very knowledgeable, and good to have him in the chat with us, and great to have you here. Folks, let's dive into some disclosures. Got a few things to look at and want to break down that code in a little bit more detail. So let's hit some disclosures to get going here. All right, the information here is for general information purposes only and should not be considered an individualized recommendation. Paper Money software application is provided for educational purposes only. Now, backtesting results are hypothetical, as we always do look at backtesting results here. In fact, we'll do that quite a bit today. As we go through this, and there is no guarantee that the same strategy implemented today would produce similar results. Now, investing does involve risk, including for some products more than your initial investment. Past performance of any security strategy does not guarantee future results or success. Look at some of the futures disclosures there. Futures and futures options trading does involve substantial risk. It's not suitable for all investors, but we really don't trade futures here at all. We have a class for that specifically, but we do like to reference those charts from time to time. So I requested to put those in so we could go through those. Now, folks, as we turn down here now to just a general discussion as we've gone through this, well, generally, pretty frequently, we take a look at steps to ThinkScripting because we do get new folks coming in. It's always good to have this as a review anyhow. But last week, we talked about, within our class, specific expansion shifts or zones within the RSI. We use ThinkScript as a goal to help us with to achieve that goal. We used actually indicators within ThinkScript, and that's part of identifying the goal. I'm using another indicator today because we do know, the indicators work and they work well within ThinkScript. We can make adjustments to them. Last week and prior weeks, we had looked at other indicators. We looked at volume indicators. We looked at RSI, that is last week, relative strength index. This week, we wanted to focus in on price action. We can look at indicators, and indicators are interesting, but a lot of what we get in terms of trading, isn't price kind of king in a lot of ways? Price is important. I know I've had discussions about that with JB. Price really does represent the trend. It kind of ties into trading what you see, not what you think. Sometimes an indicator might give us signs that might be, something might be happening in the future. But ultimately, when we look at price, and this is tied directly to price, when we're talking about an exponential moving average, and we're using some of the tools there. Now, the exponential moving average is a little bit quicker anyhow in terms of a simple moving average, but traders have taken that concept, and I know this indicator is on other platforms. I just didn't see it on our platform yet, so it took a little bit of time to work through it, but the whole idea is to try to make this a little bit quicker, trying to give it what's referred to as the zero lag. This is an indicator out there, the zero lag EMA. Some traders will call it the ZLEMA, but that's exactly what it stands for. It's just the zero lag. They're just looking for, less of a lag even with that exponential moving average. So it can be helpful for traders that are looking, that might have an idea of where a bounce is expected to be. So let's say they think, hey, it's a flag pattern or something like this. They're looking on the chart and the chart's coming up and it's kind of flagging over here. Well, they may have an expectation based upon a price pattern or a trend, but not until they get indications from the chart, that's price action, that things are actually ready to move. And that is exactly what we're talking about here. So maybe there's just a higher indication They say, hey, I've got eyes on this. I'm looking for really any signs. We've talked about Caholds in here. We built scripts around Caholds, the close above the high of the low day. This is a little bit different. This is saying, give me a little bit more data, and then plot on here, okay, a moving average that is going to fall a little bit earlier than normal. In other words, maybe it's you get a crossover happening quicker. Either a crossover, I've built this indicator so that it does have crossovers. You can have it just individualized. I've always been fascinated too with just finding those moving averages that tie closely into price, and when price gets above it. And I've talked about this with JB too. Hey, the 10-period moving average. Prices are above there. I don't need to talk to James about the 10-day. He's probably already talked about it plenty of times. But hey, when prices get above the 10-day moving average, shoot, a lot of price action can happen above the 10-day, especially if we're talking about stronger trends, right? We're just talking about getting that signal even quicker by using past data and shifting it forward is exactly what this zero lag does. But those are kind of the scripts. I wanted to explain it. I thought, hey, we could do it on this slide anyhow. But part of this too is we do go through and we say, can it meet our goal? Well, when you're dealing with an indicator, it's not too bad to meet that goal. We've got some steps to talk about Think Scripting. I'm going to share with you that Think Script at the end as we kind of go through this with some example trades as well. All right, so let's do this. I'm going to go ahead and get started on this right now. We'll kind of look at that is the dual right there. In fact, I'm going to take off, although you could include other indicators in here. I just want to keep it kind of like big picture in front of us so we can see this. But this is the ZLEMA, the zero lag exponential moving average, some say the ZLEMA. I do have some of the arrows in here, and they, and by the way, we can take a look at this as per different time frame shifts. I've thrown any stock in here. We can look at several examples. I've also created a scan. We're going to look at the scan just momentarily. But how do we determine it? I threw out a couple up here, a couple of common moving averages. Now, generally, though, as we get through this, when we look at moving averages, the 20 and the 50 is what I used. I threw that out here as an example initially to show you that what oftentimes traders will do. Have you ever noticed they'll use like a 20 and then they'll go at ×2? This is very, very common if you look through it quite a bit. So they use a 20 and a 40 crossover. In other words, give me the 1 month right over here, 1 relative the 2 month average that we're looking at here. And that's kind of the core focus. The 1 month versus the 2 month. So what I've done over here, and you can set this up, is you can go right into the indicator up top here. We'll set this up right now so you can see it. And I put in, let me push this down a little bit, the 20 and 50. Now we can look at the script itself. We'll go through this, the script itself, what it's actually doing. I did take some of this information that I'd found to get some ideas. There were a couple of different platforms out there that had built this. And so it lets you kind of think, okay, this is kind of the math behind the scenes. And so we've got that too. But to make it even easier, just go over here into the wheel. And you can go over here and put in the specific links. Now, I've enabled the arrows over here. I've enabled the alerts. So if you've got the computer set up for sound, you can do that too. Is it based on the close? Everything you'd see within Thinkorswim, and in terms of a price or volume, you could do that too. It would be right here. That's interesting, right? A volume, zero lag, exponential moving average, a change in volume. It crossed my mind as I was looking at it too. I thought I'd throw that in there. But here are your links, the 20 and the 50. I'm going to go 40. And I want to take a look at that exact same time frame in here so you can kind of get a general sense of it. A little bit quicker. Notice sometimes, the 20 and the 40, this is designed to keep you in potentially with a crossover, but right there, you're getting a little bit more indication of a quicker change. And like I said, and this is kind of an interesting one. It was still kind of a higher low, but somebody that's maybe waiting. Actually, I don't know if it was a higher low on now that I'm looking at. No, it wasn't. it was a lower low right here we're looking at on Boeing, and that is the entry. So it wasn't too responsive, which was actually a good thing because we were making a lower low. That's your crossover right there, and that's the expectation of a move. I've got the arrow, as you can see, and then you've got others in here. That was kind of an interesting move as well, kind of similar to a prior high over here. Generally going to be working better on a trend-based move, obviously. You could still run into some issues with sort of a sideways range getting hit, getting knocked out of the trade. But I encourage you to kind of use some of those moving averages. In fact, let's just share this right now so you've got it as we go through more details here. This is going to be helpful for us to have this as we take a look at the scan, because then you're going to be able to pull it up and have it on the screen itself. I'll share it right now into the chat box so you've got it. The difference is the speed of the crossover. And I'll explain what's going on there. You're actually getting a shift. So what you're seeing is effectively what's going on is we're looking at a few bars back is what this does. Oh, keep doing that. It looks at a few bars back, okay? So you define the lag, and this same sort of formula is out there in the market. It's something I was not familiar with. But what it does is it looks back a few bars, and then it adds that difference back into today's price before running the exponential moving average. So it projects out into the future, changes in price action. So it's kind of like it shifts forward a bit, and that's where the lag tries to cut out the lag. Actually, I borrowed this relatively same formula, just using some of the ThinkScript code in here. And then we're simply just looking for a crossover to occur. Okay. Now I do have other components tied in here. We've got plots, we've got signals. You can see that. This is probably going to be very familiar with you guys now because we've done a number of arrows and alerts and shown you how to do that, as well as just simple signals. Once we've defined what it is we're looking for, we're just looking at, the crossover between the two. If it crosses over the second moving average, you can do it. Now, the thing I've highlighted here within this is if you go over here, and if you just wanted to use the simple moving average I was telling you about, you just go to a 0. Watch this. If you just go 0, guess what you get? Oh, you're supposed to just have 1. What happened? It was working before. Okay. I'm not sure. I can always flip it to a 1, and you can just look and see what is happening there. That's a 1. That doesn't look too good. Okay, I'm gonna have to do a little work on that one. Oh my gosh, what did I do wrong? Oh, I probably don't have time to just try to correct this right now, although I could look at it real quick and see what I'm doing. Let me do this. As I'm setting this up, this is another common one, 17 and 34. I've seen this utilized quite a bit. And by the way, if you wanted to use the 10, just throw one of the lengths in there as a 10 or a 20 and check and see how that does relative to a simple, relative to an exponential. You're going to find it's going to be a little bit quicker. Okay, look at the two different time frames here. This is a little bit shorter than the 20 and 40. The 34 days is about a month and a half, and the 17 days is like what, 3 weeks or something like that? 17 days? Yeah, about 3 weeks if you're looking at that time frame. Here is really what we're looking at here is that crossover much, much earlier just by changing that time frame. Yet it kept you in the trade pretty early. Compare this, folks. I've done it. We can look at it, relative to an exponential moving average. This is the 0 lag. It gives that early shift. Now that's going to be pretty quick. Look how quick it is. In fact, even if I did like a 10, now let's watch this. This is going to be interesting. Look at this. A simple moving average of a standard 10-day. Remember, keep in mind we're using the 17-day 0 lag exponential moving average, but look at the simple 10-day here. Okay, we've got the crossover occurring. You can see that we've got, let's see, we need a different color for that. I'm sitting here looking at the different colors. We'll do this one, yeah. We'll change it to a red. We'll make it a little bit thicker so you can see it relative to the others, and there you go. Okay, so here's the cross. Ooh, very, very similar to the 17. Do you see price action that we're comparing here? We're looking at the cyan line, or that light blue line, relative to the red line coming higher. You can see how quick even the 34. So here's your 10. It's still kind of bottoming, right? It's still going flat. It finally starts to go up right there. The 34 starts to give you a signal that the trend is shifting about right there. So if I look at this in the number of days, I realize we're just comparing two moving averages, but it is kind of similar. I mean, it's kind of interesting to take a look at. It's about 5 days earlier, according to what we're saying here, that you get at least the change in the 34. Now, you can see too that here's the cross above price, very similar to both the 17 and the 10 period, but of course we're using the 17, not the 10. Okay, so it's a good example to kind of look at. Key point: where did the 17 start to go higher? Right about here, right there. So here it was flattening out, and you really started to see the change in the trend line here. So 10 EMA or 10 simple. We could look at an EMA too. You're just going to find it's going to be a lot quicker. Here we go. This is when that 10 started to shift higher. Let's pull it back again to the 17, which is 7 days longer, but that's 10 days earlier. Now earlier could be worse if it goes down. That's why I really wanted to emphasize, is it an area that you think prices might be bottoming? Do you have other signs in there? I mean, price pattern is still all prices. Is there a pattern there? Is there a flag? One of the reasons it was so interesting just looking at Boeing on this, Boeing over here is doing one of these. This is a lower low right here. This is a lower low on our chart. And that's why I said we could utilize a crossover, giving it more time, which crossovers can do, to develop. You know what triggered that right there? This flattening out. We held our price. Prices shot up and we went sideways there. It's a mini bull flag, if you will. I saw this on a lot of different trade setups. It's very, very similar to that. And notice this sticks out like a sore thumb there. That bar right there, and that is your signal. Okay? But like I said, you can utilize this, but it is helpful if you utilize other things that we've looked at in the past. Like, for example, you know what else we've talked about in this class? Well, we've talked about like the, where is that? It is one. Okay, cool. Zoom in on that again. We've talked about the TTM squeeze. What if prices are going to a sideways range, which we've talked about, helping us to maybe find some of those flag patterns out there. Bollinger Band slipping below the Keltner channel. Why don't we tie into that? Why don't we tie it in? I'm going to take just a little histogram off there, and we'll just look at the numbers, but could that also be something that could be helpful? I mean, potentially it could, if we're waiting for a sideways range. And so that's something that, we've done before, we've talked about. In fact, I'm going to go over here and just look at our squeeze bars. I sent a little tweet out on this recently, a little X post. You guys remember this class? The squeeze bars in time. And remember what we saw when volatility gets tight? I was just thinking about this class when I was looking at this ZLEMA, because a breakout of here, even if I had a number of different stocks, I mean, you could put it up on just your TTM squeeze bars. And then if you were to get a quick crossover there, you're likely going to see it quicker than the 10 period moving average, especially if you're using a 10 versus a 10 or something like, I mean, it could be incredibly fast. But again, what is the trade looking like? How is it setting up? You guys need to tap in to that technical expertise. Okay. Script's got a bug. All right. All right. Is that in the zero? Yeah. Well, I got to figure out how to do that. Right now it does. I just put the single one out there too. I created the single. Let me double check it, but here's the Z. I have a single one that just does whatever number you want. I was hoping to put it on a dual. So this one shouldn't have any bugs. Let's say, for example, I just wanted to do a 17 by itself. Click OK. I'll just show you how this works real quick. I'll take this off for a second. And here's a little pesticide for you there. There it is. So that's just your single. Now you can make a comparison to 1 versus 2. I was hoping to have that 2 working so you could just take one off and have a single one in there that you wanted to use against price. I swear it was working. It did work when I was doing it. I don't know. I've done something. I can try to correct that before I post it back into the description. By the way, as I share this into the chat, I want to let everybody know that scripts aren't guaranteed for timeliness or accuracy, right? Because they are reliant on the data coming in. I think we have got great data coming into the platform. And as long as that data is good, it should unfold correctly as well. This one does not have the arrows. This is like my earliest script as I was just getting the hang of it. But you can see over here, there's a little bit of a crossover there as well. Price action crossing over. That's a really tight range. Anyhow, I'd be happy to work on that. And by the way, for those of you seeing this on the recorded version, I always put this in the description section below the video. You got to click on more right below the description. And at the bottom, you'll have the scripts listed there. Okay. All right. But there you go. What did we have? This one just barely came off, and it's actually coming down, which is interesting because you would have got your signal actually a little bit earlier on the 17. That's where some of the back testing could be helpful. But let's just come over here and let's see again. Let's just choose one of these, like CDNS, or what else do we have? I mean, God, that one's been in there for 28 days, and the squeeze in an incredibly low volatility time frame. XCEL, maybe more interesting on the crossover. There's MCHP. Some of the semiconductors too. MCHP. Okay. Upward trend, maybe a longer term flag over here. The possibility of a break higher. You're actually getting a signal right here, but that's a very, very tight range. And something like this, it may be more useful to use that crossover, right? Let me know if there is another sort of a bug in there, though, that you're seeing, because I would love to know that. Oh, let's see. So Robert's noted some things too. I know Robert does a lot of coding, so appreciate that, Robert, in the chat. All right, very good. Thea, using that RSI shift expansion. Yeah, looking at zones. I've been utilizing that this week as well, looking for different stocks. I'd never even thought of it before until I put that in last week. Let's go ahead and just put this back in again. I'm going to keep that up though for a second. And I'm going to show you guys where to go if you want to take a look at that. If you might have missed that class, it was on those RSI zones. Oftentimes was frequently used by traders, investors. I'll pull that up here just momentarily. But in the meantime, let's go in and take a look at the scan that I built for this. We can go S&P 500, and I actually have it up right now. Let's click on enter. I'll share that here too. So what this looks at right now is it's just, and by the way, this is the 20 and the 50. Like I said, those are two commonly used moving averages, exponential moving averages, but the 20 and 40, like taking the time doubling it, could be of interest as well to kind of take a look at. As we come down here and take a look, we had some of the discretionaries we talked about previously. Oh, there you go. So Norwegian Cruise Line, NCLH. NCLH, I'm going to get this other moving average. There's an alert coming in right now off of that. Let's take this one out, put this guy in, and there you go. Make sure I've got everything in place. Yeah, there's the dual. Okay. Oh, that's a 1734 we actually have in here right now. So like I said, it does create alerts. You can take that out real easily. It's just optional if you wanted to have that in there. But let's take a look and see what we've got. Now, you might be looking for a bullish indication here, a bullish sign. This is it comes down to hey, what time frames are we looking at here? We could expand it out and wait for different kinds of setups too to look at. But as we come and look at this right here, you can see, oh, let's see. Oh yeah, what am I doing? This, no, I'm getting the crossover here. Interesting. Yeah, okay. No. It's okay. I want to look at a couple. We're getting this one right now. So we scan for it. It's coming across. I want to make sure it's setting up. Could this be construed as a flag pattern? Perhaps. And that could be helpful because why? Well, the scan just notified us of this. That's a move breaking out. Some people might look for that. What am I saying when I look at this? I'm saying this. I mean, the possibility of this, it might already be happening right now, but is that not a longer term flag pattern right there that you're seeing? How about the volume kind of shaping up towards the end of the flag? Maybe it's starting to, I don't know. Who knows? But it could be of interest to traders to kind of look at. I'm going to pull this up and see what we got. Yes, that is the scan right there. I've taken it and I've thrown it into the scan. Let's put it up right now. And I'll pull it up and, oh, let's get to it. Share it with you guys. Again, scripts aren't guaranteed for timeliness or accuracy. Like I said, the data is good. Well, it should work out mathematically. I've looked at it. I will look at the other one again to see if I can get the indicator portion a single, if we just want a single relative to a dual. Okay. All right. Let's see. So yeah, not guaranteed for timeliness or accuracy. Folks, plug that in. I think it can be very useful. Let's look at some of these now with the time we have remaining to look and see. And it's a quicker crossover. You can change this too. In fact, real quick, we can look through some more of these, of course. Same code, everything identical. Of course, maybe I want to change this if I wanted to, but down below, I'm scanning a bullish time frame. We've talked about this code before, looking back a day. That's a 2-day look back there. We're looking back a couple of days. So what is this good for? This is good for a crossover today, which is what you're seeing on that Norwegian cruise line. Or it could have happened yesterday as well. If I wanted to change this back for a few days, if I wanted to go back 5 days, I could put a 4 in here. Again, this is the crossover. You guys might have a favorite crossover you want to use. I don't know if anybody has one, I could just throw it in as an example as well. We could see what we get in here too and see what it looks like on some of these charts. Just let me know. Be kind of fun just to do that. We know Oracle would have a crossover. Oracle had a big day yesterday, up about 33%. Emerson Electric. Okay. And some others in here. Huh. BX or GS. EMR first. Okay. So there's your signal. And by the way, this is not the same signal. I should have said that. This is the 1734. Remember the scan was different. You got to remember to have these in line. But I figured I had to kind of create both of these because otherwise, how do you see it? You got to have both. So there's your colors. You change. You got the up arrow, the down arrow. You got the width on those two if you want to change that. All codes that we've looked at in the past, and they're all part of the script if you want to incorporate that. These alerts might become annoying. You can always just take those out too. You're getting a cross right here. Fascinating, isn't it? Pushes the data forward, says, wait till it's interesting. You could find some of the stronger breakouts and compare that with RSI zones that we looked at previously. We could also compare it with other indicators. We don't want to forget what we've already created if it could be useful going forward too, right? I mean, what other things should we look at here? How about that the MACD? The MACD lines separating themselves and expanding. expansion of the MACD lines. That might be one to also look at too. You could have a couple of these operating behind the scenes for signals, maybe within a sector that you think might be performing stronger. Just some ideas out there. I think it's always kind of nice though to look and kind of see where you might be seeing strength, and then look or stronger anticipated trends, and then throw these kind of indicators in there. Okay, just going to share you guys with this real quick. This was our, well, this is our class that we teach each and every week. In here, we talked about hidden RSI levels, spotting the moment of expansion as we go through there. If you guys want to take a look at this playlist, and, you know, here, I'll just throw that link into the chat so you've got it. And there you go. Yes, okay. Oh, yeah, for sure, for sure. Let me share that. I need to do one thing on that. I want to make sure, I want to check it actually. See, let me do this. See, I'm gonna, and everybody on that single script, I got to double check just a couple areas before I share. I don't want to get codes out there that aren't working. That was the first one I did, and it appeared to work. I built on it a little bit, but I did change some things for the dual script. So I'll have that posted down below in the description section. You know, as this class goes through a process of being recorded, okay? So it'll be down there. I'll have both of them. I'll have all three, okay, in there. But there you go. If you want to take a look at this class specifically, here it is right there. But I promise to have it there for you. Let me just go through and take a look. But here is the RSI. I know it was mentioned in the chat, but there you have it. Okay. Hey, just out of curiosity, what was it that you were seeing within the code where you're getting bugs on it? If you could let me know on that. I saw the crossovers occurring based upon what I was looking at, but I would love to hear any impact or any insight, of course. Always open to that insight. BX was another one we were looking at here. Okay, here is BX. Now, what are we getting on this? You know what's funny? I did not pull up, and I run a lot of kind of flag scans and other scans. This is the first time I'm seeing actually BX show up on any of these. I've never seen BX come up yet. I don't know why. Comes down to maybe looking at price action specifically. Do you see that flag over here? Now, if that was a flag pattern unfolding, using exactly what we're looking at here, and that is your crossover there, just using the 2040, right? Where might a target be? Let me pull this down to kind of highlight where this is at. Click on this right here. We'll go to our expansions. We'll go to the bottom, to the top, just measuring a standard sort of a flag pattern. You know, where might some traders anticipate it to go? Well, if it's a full T1 target range right there, from this high, from that low to this high, we measure the same distance on up. That is where we find our 100% retracement level. Many traders will utilize. I mean, that's what's always drawn my attention to the flag pattern. Potential, right, is that T2 target. Your target one is actually, we hit that today, off to the prior high on a flag, right? It's always coming up to the prior high. That's a target one, as they'll call it sometimes. And a target two would be the full extension of the pole of the flag. You know, this just caught us the possibility of a flag pattern unfolding. And I just was looking at it on the fly just to kind of highlight it here. Okay, what else do we see on this? We don't want to forget everything we've talked about. We've done a number of discussions on volume. You guys are probably just sick of volume at this point, but can be really helpful. It's a totally different dimension of trading, right? Is volume. Volume is different. It's a totally different aspect, right? It has nothing to do with prices, anything, but it has to do with buying and selling. People putting their money where their mouth is. In a lot of cases, I mean, they buy it versus talking about it would show up in volume or sell it. But there you go. So this could be really interesting and designed to be quick, but we're using the crossover. So it does give us some time for potential setups. I'm going to go ahead, just for the sake of this class, and we'll kind of finish up on this. Oh, the single versus the double, gotcha. Yeah, I'll try to work out that too. Maybe if I just work out that, see ya, what I'd like to do is I'll just post that second one, just the crossover, so you can just put a 0 in there. Much easier than having two. Would that work out if I figured out that? Two's better than three. Three scripts, right? Keep it nice and tight. One for the indicator, one for the scan. Let's put a trade on this and let's put it up around 210 as an example. Now, what I'm going to do on this trade, we'll tap into a concept we've discussed here in this class, but that's going to be something along the lines of an ATR. Now, some traders might look for a close below the low of today's bar. That's interesting too. That could be easily utilized. Look at that. So if it closes below here and you're breaking out, which is exactly what we're doing right there, we're breaking above highs. Currently, the day's not done. It's getting close. About 25 minutes left in the day. But here's the thing, folks. If we close above that level, many traders are saying, that's my sign. I got volume. Not all of them. But is this an example? Some traders would say, I don't anticipate it coming down here. A relatively tight stop could be utilized here. And again, remember with the stop order, a stop order does not guarantee an exit at that price. Those orders go to compete with other existing orders in the market, right, to fill. But just wanted to highlight that as well. But let's just go ahead and put a trade on here. I'm just going to make it really basic. I'm going to put it just below this low. Look at that, 177.75. And 210 is our T2 target. So let's do it. Let's just do, it's kind of an expensive stock. I'll go ahead and utilize, we'll just use a OCL bracket order. Shut that guy down so we can see it. Let's go with a 50 share. And I'll link everything together. 177.75 was our stop. 210 was our target up top. The market's open now, so we should be able to get this filled. And remember to always, if you don't want your stop orders to fall off, your limit orders fall, put a GTC in there. Otherwise, you might be surprised. So yeah, it just makes sure that they stay at good till cancel orders. You guys good with this? Are we all set? I'm going to go ahead and just send this through as a market order, just 50 shares on this BX, breaking out of a bull flag with a target range of a 210 area. All right. And there she goes. There's the order. Okay, we put a trade in this class. We're going to take a look at future trades on this. I will start working on that script right away so that we can get that all into one. Okay, if you just want to look at a single line, which I think is very interesting as well. Easier to definitely spot. Crossovers have some of their advantages. We talked about those. Again, some disadvantages. The lag time might kind of defeat some of the zero lag. But today, folks, it was all about the zero lag EMA. Again, always put it into additional scenario setups. Like we just saw, flag patterns, other indicators we've discussed in this class, folks. If you're finding these discussions valuable, if you're getting use out of these, and I sincerely hope you are, smash that like button for me. It does help with the algorithm. It gives me a really good idea that you guys are getting some value out of this. I didn't see a survey in the chat. But give James and I a like on this, and all right, be sure to subscribe to our channel as well. Would love to have you on board as a subscriber. If you're not already, we've got like 160,000 plus subscribers right into our Trader Talks here. You can actually click on the bottom right-hand corner of the screen, folks. All right, everybody, we'll have an excellent rest of the day. I look forward to future discussions with you. Thanks so much to our production team behind the scenes, as always. Thank you, JB, in the chat. And folks, great to have you on board. See you all next time. Bye-bye.